Hey traders and investors, it's Serge Berger here. Today we're going to have a look at General Motors. Of course, General Motors with all the recalls and all the other issues they've had over the past few weeks and a few months. Of course, the stock has been punished, and at some point it became quite oversold here at the lows in April. And I want to have a just give you a bit of an update of where I think the stock is going because it's starting to look a lot more constructive. At the same time, of course, it's not the stock or the company's not out of the woods yet, so it's giving us some pretty good risk reward here at the very moment. If we peel back the chart just a little bit, you'll see that basically this uptrend off the July 2012 lows has obviously been severely broken. So from that point of view, the medium-term trend here doesn't look very good, but it doesn't rule out another sort of move higher, potentially even sort of a retest of this broken uptrend area. Not exactly up to it, because otherwise at some point you start making a new high, but somewhere sort of into the high 30s. So let's have a look at what that looks like a little bit closer up. And again, I think what's important to understand is that when a stock like this gets bombed out and starts building a constructive base, it starts speaking volume about potentially sort of smart money versus dumb money, who's buying and who's selling. In this case, or as usual, of course, the smart money, buying, and the dumb money sort of freaking out about it. So at the moment, you can see we made this very important higher low here in mid-May after being really bombed out in mid April, and this came after having made a low before this. So in that sense, you almost have like an inverse head and shoulders pattern. Although I don't really care too much what that pattern is. I just see that you have a capitulation low here, followed by a higher low, and then a move higher. At the moment, the stock is sort of trying to get back over its 200-day moving average, which hasn't been a great indicator for the stock. But the fact that the stock is now consolidating below the 200-day moving average, or right at it, is actually to me quite constructive. We can then take this a step further and start drawing some very basic resistance lines, and if you followed me for more than a couple of days, you know that these resistance lines to me are drawn more as reference areas, so you can draw them in multiple different areas. And some people will say, oh, you're not connecting all the dots exactly. Guys, I'm telling you, I'm doing this for 15 years. It doesn't really matter if you do this extremely exactly or you're a bit more sort of generous in terms of where you draw these lines. In other words, it's actually much better to draw these lines with sort of a crayon as opposed to a pen. Okay, so thicker lines. In other words, reference areas rather than points. So, and you can see right now we have two resistance lines. For one, the top, the resistance line from last December, and then again from the most recent lower high in March. And this is all coming together here as the stock is coiling up below the 200-day moving average. So I'd say a push above about the 36.70 mark or so on a daily closing basis stands a good chance of getting the stock back into movement to the upside, somewhere into the high 30s over the course of a few weeks. But of course, we do need to see a breakout and a move above this resistance area for the stock to get another push higher. And this is, by the way, a very non-consensus call. A lot of people are still very negative on the stock, which is exactly why this may work if we finally get a break above about, say, 36.70 or thereabouts. Hope this makes sense, guys. As always, if you got any questions, you can hit me up on Twitter. My Twitter handle is SteadyTrader. Thanks, and I'll see you in the next video.